Assalamu alaikum. Have a good day. Welcome to Financial Management eLearning with me. Today, I'm going to discuss Cost Accounting Module 2. So let's start. So today we'll learn cost concept, classification, and the statements. Within this module, cost object, expenditure, cost, expenditure and loss, cost classification, cost data and use, the chart of accounts, a statement of cost of manufacturing goods and sold, income statement will learn. So let's start. Cost object. A cost object is a segment of an entity with a specific cost information desired. Okay, a cost object is a segment or an entity for which a specific cost information is desired. For example, cost object is a tangible input for a product manufactured or service provided, like labor of material. I think it is clear to you. So here, if we see resource and comes to activities, that means material expense, other things, value-added activities or non-value-added activities, is the cost object, product, quality, efficiency, customer, risks, capital, etc. So generally, cost object terms is used for fixed cost component to total cost. Otherwise, anything which is incurring some cost can be called as a cost object, like an advertisement. Okay, so cost object is a transferable input for a product, manufacturer, service provided, just like labor or material. That means expenditure. Expenditure, a payment or the promise of future payment. Now, expenditure. Expenditure, a payment or the promise of future payment. Okay. Some revenue expenditure, that payment for the short time consumed. And capital expenditure, this payment for the long-term asset. Okay. So cost is the value of money that has been used up to produce something and hence is not available for use anymore. So there is some difference, cost and expenditure. Here is expense, if you see that, and cost. For example, here whole circle is, if cost, then expense is the part of this one, that was a red circle. We can say that for your company, purchase a car or jeep, the total expenditure is the cost of the company, is a fixed asset. But every month or yearly, your company accounting charging the depreciation of that asset or cars. That depreciation is the expenses. So cost and expenses, there is the difference. So expenses is economic benefit used in pursuit of revenue. Okay, and cost is the total resource sacrifice unused economic benefit. So here, element of cost: material cost, labor cost, other cost. Here we know everything, every cost are divided into two types: direct and indirect. So all direct is the direct variable cost, and all indirect goes for the overhead cost. So here expenses. Expenses is a cost used up in earning revenue in a company's main operation. So expense is a cost used up in earning revenues in a company's main operation, but loss is associated with the incidental transactions. Okay. Now, cost classification. We can classify cost in different way by behavior, by function, by traceability, and other way. If we see here, we can classify the cost by nature, direct, indirect, by behavior, fixed, variable, semi-variable, by the element, material, labor, expense, by function, production, administration, selling, distribution, research and development, prime cost, etc., convertible or unconvertible, normal, abnormal, sunk cost, estimate. So we can classify the cost in different way that we're making. So we can segregate or classify cost in different way. Now, the cost data and use. So look here, cost flow in service organization, the supplier, administrative expense, marketing expense, research and development. This all cost we are segregating in two ways, direct and indirect. Directly charged to the cost object, and indirect, the absorption rate we are charging in cost object. Then we make income statement and then balance sheet. Same way here, if we see the cost flow of manufacturing organization, in manufacturing organization, cost are two types, product cost and period cost. Here, if you see the product cost, direct material, labor, manufacturing, variable overheads, is goes to the production. And here we know the there are three types of inventories: material inventories, work in progress inventory, and finished goods inventory. So all inventories is we are showing in our balance sheet, but periodic cost, that means periodic or non-manufacturing cost and other, we are charging in our income statements. So this is the cost flow of manufacturing organization. If you see, so it is a cost flow of manufacturing organization. So if you see here the chart of account, so what is chart of account? Chart of account is a list of accounts used by the organization. I think you all are the professional and you are using the accounting software, and every software is built in the chart of account, and in your organization they're preparing the balance sheet and as well as profit and loss account, and all are within the chart of account. So in the chart of account, simple chart of account, there are group heads, that means sales, cost of goods sold, direct expense, etc. And in the balance sheet, the chart of account, we see the asset item as well as liability items. So in the asset item, cash, bank, accounts receivable, debtors, prepaid expense, inventories, and investment, accumulated depreciation, and other asset, etc. We are showing there. And as the liability, accounts payable, others payable, employment expense, etc. Drawings, stock, written earnings, etc. If we see here the flow of cost exhibit here, raw material, direct labor, and factory applied factory overhead goes to work in progress, and from their cost of finished goods and their cost of goods sold. So here in the chart of account for profit and loss account, the revenue part, okay, and also the cost of goods sold accounts part. In revenue part, sales revenue, sales return, allowance, sales discount, interest income, and also cost of goods sold account. They are purchase, sale, expense, etc., return, allowance, etc. And expense account, in our chart of account, we're seeing that advertising, bank fee, depreciation, payroll, payroll tax expense, rental expense, other operating expense, etc., utility expense, everything. So here we see that direct material, direct labor, and manufacturing overhead. It goes to the opening work in progress, and the cost of goods product, which is the finished goods, and remaining the work in progress item. So this is the scenario or a chart of account. So here look, every ledger item, taking in a number, each have the specific number, that means from a from 1 to 2, etc. is the asset, and others, and 2 is the liability, and the 2 side, and is a, that means here if you see 4 is the revenue, 5 expense, etc. It can be in your way. So where here a statement of cost of goods manufacturing is sold. So prime cost, we need, we know the direct material cost and direct labor cost goes to prime cost, and factory cost or manufacturing cost, direct material, labor, and factory overhead. Also, conversion cost means direct labor cost, factory overhead. Here, if we see here, look, prime cost is direct material and direct labor cost, and factory cost is indirect material, indirect labor, overhead, and conversion cost is here. Conversion cost is direct labor, indirect material, indirect labor, and other expense. So here, if we cost of goods sold, same way, we can calculate it. Total factory cost plus opening work in progress inventory minus ending work in progress, or direct material plus direct labor, factory overhead, plus opening work in progress minus closing work in progress. This way. So here is the format of a statement of direct cost. I have taken it from the cost accounting standard published by the Institute of Cost and Management Accountant of Bangladesh. And if you go its website, and there all are there, just download it and read it. It's a valuable resource. So a statement of direct cost, look here, start from the material consumed and close it the prime cost. And look here, a statement of cost of goods manufactured, start with prime cost and closing cost of goods manufactured. An income statement, there is an income statement, is a statement of measure the company's financial performance over a specific period. You all know it, okay? So income statements, gross profit, we can calculate net sale minus cost of goods sold. And here is the income statement, that means it start with sale minus sale return minus sale discount, net sale, variable expense minus, and we'll get the contribution margin and less the fixed expense, total fixed expense after minus, after deducting, we'll get net operating income, okay? So here's the flow of income statement, revenue minus expense, we'll get net income or loss, and the return earnings, add with the net income and minus dividend. If paid, then return earnings, balance goes to the balance sheet. So we know asset equal to liability plus owner's equity. So that's all today. So what we learn today, we learn the cost concept classification statement. Here we learn cost object, expenditure, cost, expense loss, cost classification, cost data, chart of account, estimate cost of goods manufactured and sold, and income statement. So today we are closing here. We'll see you next with my next module. Till then, take care and hope we will meet very soon. Allah Hafiz.